Good morning, good afternoon, and good evening, ladies and gentlemen, and welcome to the G20 Tax Frame 2022 Award Ceremony and third CBDC Seminar. My name is Wahyu Iwoho, and I am very honored to take part as your master of ceremony for this event. First and foremost, allow me to greet His Excellency, Governor of Bank Indonesia, Bapak Peri Warjio.
Hello, Wahyu. How are you? Everything's good there?
I'm good, Bapak. Thank you very much. Good to see you. And also His Excellency General Manager of the Bank for International Settlements, Mr. Augustine Carsten. And our respected invited guests, Honorable Assistant Governor of Bank Indonesia, Ibu Filianingsih Hendarta, Head of the Payment System Policy Department, distinguished finalists and participants of TechSprint, distinguished speakers and moderators for the CBDC seminar, and to all our respected guests, thank you for your attendance. Right, ladies and gentlemen, Bank Indonesia has been conducting a series of CBDC seminars throughout this year, as well as administering the G20 Tax Frame 2022 on CBDC in cooperation with the Bank for International Settlements, or BIS, coordinated through its Innovation Center in Singapore. This event will be the most awaited event, where we will announce the winners of the G20 Tax Frame 2022 on CBDC, followed by two casual talks on CBDC technology and design. To begin the event, let's welcome the General Manager of the BIS for Leaders Insight session, Mr. Augustine Carsten. The time is yours.
Distinguished guests, ladies and gentlemen, dear Governor Perry, it is a pleasure to join you today at the closing event of the 2022 G20 TechSprint. Since its launch 2 years ago, the G20 TechSprint initiative has showcased the potential of new technologies to address financial sector issues of importance to regulators and central banks. This long-form hackathon significantly advanced the development of technological solutions in SupTech and RegTech in 2020 and Green Finance last year. The topic of this year's edition, Central Bank Digital Currency or CBDC, is relevant across the globe. Many central banks are working hard on CBDC and making good progress. 4 retail CBDCs have already gone live. Pilots are on their way in 29 jurisdictions, and 72 central banks have communicated publicly about their CBDC work. It is no exaggeration to say that CBDC is also central to our work here at the BIS. Since money is the core concern of central banks, and central banks are the BIS's key stakeholders, we have a mandate to be ahead of these developments, both in terms of policy as well as practical aspects. On the policy side, our researchers are working on several fronts, including the design and macroeconomic implications of CBDCs. BIS-hosted committees and associations collaborate with central banks and academia to push the boundaries of our knowledge and inform the policy debates. In our latest BIS Annual Economic Report, we laid out a vision for the future digital monetary system that adapts to serve society. It combines new digital capabilities such as programmability, composability, and tokenization with the safety, stability, and accountability of central bank money. Central banks remain at the core of the system, providing a foundation of trust for services by the private sector, built around central bank money. The blend of new technologies and central bank money takes the form of CBDCs. In our vision, the future monetary system would have three components. First, wholesale CBDCs for transactions between central banks and financial institutions. Second, retail CBDCs and fast payment systems for the public. And third, multi-CBDC arrangements to enable cross-border operations. All this belongs to the realm of policy. The Innovation Hub is the lab charged with putting these ideas into practice. We're rolling up our sleeves and working with other central banks and the private sector to build innovative solutions to the challenges posed by CBDCs. On wholesale CBDCs, our Swiss center has explored how central banks could offer settlement in central bank money in a future with more tokenized financial assets. We learned that it is possible to integrate CBDCs into existing core banking systems, and that central bank can play a key role in systems based in distributed ledger technology or DLT. In our Hong Kong, London, and Stockholm centers, we're exploring retail CBDC. One key aspect is their offline use, which is important for users in remote areas or whenever internet access is disrupted. We are also exploring how to distribute retail CBDC through an open API ecosystem and what a technical implementation of a cyber-secure two-tier retail CBDC architecture would look like. On multi-CBDC arrangements, the BIS Innovation Hub has been working in Switzerland, Hong Kong, and Singapore with central banks on several concrete prototypes of using CBDCs across border. These share the goal of reducing cost and increasing the speed of international payments for trade and remittances compared with today's system of correspondent banking. These experiments demonstrate that common platforms with two or more wholesale CBDCs are technically feasible. This would allow for lower costs, faster settlement, and increased operational transparency. More recently, we also started to examine the technological feasibility of interlinking different domestic retail CBDC systems. This could enable the use of CBDCs in international retail and remittance payments. Yet many questions remain. Further experimentation and initiatives like TechSprint can help make further progress on the questions ahead. This year's G20 TechSprint has been instrumental in scanning the technological universe around three essential I's for CBDC: issuance, inclusion, and interoperability. Building effective and robust means of issuing, distributing, and transferring CBDCs is a crucial step in making CBDCs work in practice. Enabling financial inclusion and making sure that solutions work for all is a necessity. Improving interoperability is a top area of investigation to fully harness the potential for CBDCs to enhance cross-border payments. Many of the projects in this year's TechSprint investigated these challenges, and the solutions proposed by the winners help us refine the Hub's contribution in the CBDC space. They also show how public-private partnerships can help the monetary system to advance supporting the public interest and sustainable innovation. I want to thank the Indonesia G20 presidency and Bank Indonesia for the strong support and partnership in co-hosting this year's G20 TechSprint. I would also like to thank the eminent panel of judges and the invited experts for their support for this initiative and efforts to select the winning teams. And finally, none of this would have been possible without the excellent work and dedication of the winners. Thank you very much.
Thank you, Mr. Carsten, for your enriching insight. Right, today we have arrived at the pinnacle moment for the G20 Tax Frame 2022 competition. Bank Indonesia and BIS Innovation Hub have successfully rounded up the international community to formulate innovative, technology-based solutions aiming to solve the recent problems faced by various countries. The G20 Tax Frame 2022 offers three problem set, which are: first, implementing effective and robust issuance, distribution, and transference. Second, enabling financial inclusion. And the third, enabling connectivity and interoperability. It has been an inspiring and awakening journey. And now we invite you all to recollect those amazing memories through this next kaleidoscope video.
Over the past few years, technological advancements and digitalization have fueled innovation and reshaped the payments landscape. This includes the emergence of new technologies such as DLT and Web 3.0, which propel the use of digital currencies, including those issued by the central banks or CBDC. There are numerous theoretical concepts and approaches for designing and implementing CBDC that have been proposed. Some critical business, operational and technological challenges and gaps, however, must be addressed. Organised by Bank Indonesia and BIS through its Innovation Centre in Singapore, the third edition of the G20 TechSprint aims to catalyse the development of CBDCs by inviting innovators and technologists from all over the world to develop technological solutions for designing and implementing retail and wholesale CBDC. Participants are challenged to address one of three high-priority operational problems and opportunities in CBDC's area. The G20 TechSprint 2022 journey began on the 25th of April 2022, with around 100 teams worldwide participating, ranging from enthusiast individuals, specialized fintechs, to prominent and multinational corporations. Among them, the 21 finalists with the best proposals have been shortlisted to further develop their prototypes of solutions. Each finalist received a cash stipend of 145 million rupiah to support the development of the prototypes. The finalists were also invited to the Midpoint event on July 12, 2022, where they received feedback on their prototypes from monetary authorities and international organizations' representatives, as well as invited experts. Afterwards, the event continued with the strategic insight of CBDC, along with practical insights and a showcase. In the final round, 11 independent judges were invited the most applicable and deployable solutions in designing and implementing CBDCs. Each winning team will receive cash prizes of 770 million rupiah provided by Bank Indonesia. Thank you for being a part of the G20 TechSprint 2022, a collaborative movement of synergy and innovation on CBDC with the spirit of recover together, recover stronger.
May we have a round of applause for the G20 Tax Frame 2022. And ladies and gentlemen, before we cordially invite His Excellency Governor of Bank Indonesia to deliver his remarks and announce the winners, let's see the 21 finalists of the G20 Tax Frame 2022 who have been strictly shortlisted from around 100 participants. And next, ladies and gentlemen, we would like to invite His Excellency Governor of Bank Indonesia, who joins today virtually live from Washington, D.C. to deliver his remarks, followed by the G20 Tax Frame 2022 winner announcement. Without further ado, please welcome Governor Perry Warjio.
Well, thank you, Wahyu. My dear friend, Honorable Agustin Carsten, General Manager of the Bank for International Settlement. Distinguished guests, ladies and gentlemen, good morning, good afternoon, and good evening. May peace be upon you. Welcome. Welcome to this international event of G20 Tax Frame 2022 Awards Ceremony and the third CBDC seminar, proudly present and organized jointly by Bank Indonesia and Bank for International Settlement, coordinated through its Innovation Center in Singapore. Now, I'm currently in Washington, D.C., United States of America, attending G20 foreign finance minister and central bank governors, which is my dear friend Minister Sri Mulyani and myself will co-chairing. And of course, the IMF and the World Bank annual meeting. One of the most important agenda in the G20 Indonesia Presidency 2022 is the development of central bank digital currency, CBDC, as part of digitalization. G20 Tax Frame, one of the G20 side event, is an annual long-form hackathon organized under the banner of the G20 to seek out the best in-class technological innovation aimed at addressing high-priority areas of interest among the global community. G20 Tax Frame 2022 carries the theme of Central Bank Digital Currency CBDC, which is also one of the topics in the International Financial Architecture Working Group, IFA Working Group in Indonesia G20 Presidency 2022. Ladies and gentlemen, technological developments and digitalization have driven innovation and changed the payments landscape. This is including the emergence of new technologies such as the development of the Web 3.0 and distributed ledger technology, DLT, propelling the use of digital currencies, including those issued by the central bank or CBDC. CBDC has been the center of discussion among the central bank. Numerous research on CBDCs has been conducted by central banks, international organizations, academics, and industry. This includes to identify the potential benefits and the implication of CBDCs, how they might be designed and developed, as well as the different technologies that could be used. In addition to this fact, the emergence of the stablecoins and other cryptocurrencies has accelerated the development of CBDCs. There are three key issues related to the development of CBDCs that discussed among the central bank, international organizations, and other parties, which are, first, CBDC design. Central banks need to choose the optimal design of option for CBDCs to meet the policy objectives, as well as to mitigate its potential risk and implication. The policy objectives may differ from one country to another that determine the design chosen, including whether to develop the wholesale CBDC or the retail CBDC or both, regardless of those design being chosen. CBDC could serve as a sovereign digital public good that fulfills the public interest as well as preserves central bank mandates and objectives. Second, CBDC's role in financial inclusion. A well-designed CBDC, especially retail CBDCs, can further support in addressing barriers to financial inclusion, including by providing offline capabilities, low-cost transaction, and data portability. Nevertheless, financial inclusion should be achieved immediately and should not wait or rely only on CBDCs. As we did in Indonesia, financial inclusion is enhanced and accelerated through payment system digitalization, including the standardization of quick response, which is what we call it quick response Indonesian standard, and also advancing open API for payments, as well as the implementation of fast payment system, which is in Indonesia we call it Bank Indonesia Fast, BI Fast. While the role of the CBDC in the future for financial inclusion will complement the ongoing initiative. The third, interconnectivity, interoperability, and integration of CBDC, including for cross-border payments. Most countries that already have national payment system should consider CBDC's coexistence with current financial market infrastructure, including payment system, by ensuring its interconnectivity, interoperability, as well as integration. With these three I capabilities, CBDC has the potential to improve cross-border payments by using new technologies and simplified distribution channels to address key challenges, including high cost, low speed, limited access, and lack of transparency. Enhancing cross-border payments with CBDC require collaborative governance policies to minimize macro-financial risk, among others, foreign exchange regulation, capital flows management, operational risk, as well as market supervision toward spillover. To resolve these three above issues, many already propose theoretical concepts and approaches to designing and implementing both wholesale and retail CBDCs. However, there are operational and technological challenges and gaps that need to be addressed in practice before decision can be undertaken to implement CBDCs. This is where the G20 Tax Frame on CBDCs has its role. Distinguished ladies and gentlemen, under Indonesia G20 Presidency 2022, Bank Indonesia together with BIS launched the G20 Tax Frame 2022 with the theme of CBDC on 25th April 2022. The event is a great opportunity for bright and ambitious individuals, as all of you, as well as well-established companies, to show off their best potential and present the most innovative and applicable solution to solve one of the three problem statements that represents different issues and functional objectives of CBDCs. We are delighted that central banks, both within and outside the G20, have also contributed on the formulation of the G20 Tax Frame problem statement, which represent issues on development CBDCs encountered by central banks around the world. The problem statement are: first, effective and robust issuance, distribution, and transference. Second, enabling financial inclusion. And the third, connectivity and interoperability. The enthusiasm of participants in this event is unexpected, with more than 100 participants from around the world. From all the submitted proposal, we have selected the top 21 participants as finalists, who successfully demonstrated promising notion to address the problem statement and pass to the next prototype development stage. And for those 100 participants, as well as the top 21 participants, we thanks and congratulate to all of you. Each finalist received a cash stipend of 145 million Indonesian rupiah, or about 10,000 US dollar, to assist the development of the prototypes. Prior to the finalization of the solution, the shortlisted teams have also been invited to present their proposed solution to a panel of experts and guest regulators and authorities in the July 2022 midpoint event. The final judging process was conducted in September 2022. All solutions provided by the finalists were meticulously assessed by prominent judges. The judging panel comprises 11 experts in CBDC with diverse backgrounds, from central banks, international organizations, academics, and industry, to provide robust evaluations of the prototypes. I would like to express our sincere gratitude to our expert judges for their efforts during this event. And ladies and gentlemen, today we will witness the top 3 champions from each problem statement, who have successfully developed applicable and deployable solutions and eloquently elaborate the finest way to approach the challenges in designing and implementing CBDCs. The 3 winners of the G20 Tax Frame 2022 will receive a cash prize of 770 Indonesian rupiah million, or about 52,000 US dollar for each winner, which reflects Indonesia 77 celebration of independence in 2022. Distinguished ladies and gentlemen, once again, I would like to take this opportunity to truly appreciate all the participation teams for giving their best efforts and innovative ideas, which has been proven invaluable to the process of understanding technological aspect and potential benefits of implementing CBDC. In conjunction to the award ceremony, today's agenda will also present through provoking discussion by renowned figures in CBDC research and development. The session is going to discuss the choice of technology with relation to the features of CBDCs, such as programmability, user data privacy, and public access. This G20 Tax Frame 2022 is only a small step in endeavor of finding solution to current problems in designing and implementing CBDC. We hope that the proposed solution and ideas will provide valuable input to achieve the ultimate goal of CBDC as the main gear for financial services and financial inclusion in the digital area. With the spirit of recover together, recover stronger. Let us continue to strengthen synergy and innovation. Now, I'm going to announce winners of the G20 Tax Frame 2022 after rigorous evaluation and scoring from 11 global expert judges. We have selected the following 3 champions for each problem statement. For the first problem statement, effective and robust means to issue, distribute, and transfer CBDC. The winner is Dragonfly FinTech team. For the second problem statement, enabling financial inclusion. The winner is Bit Idemia team. And for the third problem statement, connectivity and interoperability. The winner is Partier team. Congratulations to all winners. We hope the ideas and solutions offered by all participants of the G20 Tax Frame 2022 can inspire and beneficial and creating legacy for CBDC initiative around the world. With that, thank you very much.
Thank you, Governor Perry, for your remarks. And there we have it, ladies and gentlemen, the winners of the G20 Tax Frame 2022. And may we have another round of applause for our winners. Right, ladies and gentlemen, we'll proceed to the first casual talk with an engaging topic of the balancing technology and design option for optimizing benefits and mitigating CBDC risk. And to lead the sessions, I will hand the session over to our moderator. He holds a PhD in economics from MIT and is president of the Central Bank Research Association. And he has written and published on various topics relating to international macroeconomics and exchange rate pass-through, as well as on cryptocurrencies, stablecoins, and CBDC. Ladies and gentlemen, please welcome Head of the Eurosystem Center of the BIS Innovation Hub, Mr. Rafael Auer.
morning, good day, and good evening. Thanks very much for the kind introduction. I also warmly want to welcome everybody around the globe to this panel on the important topic of balancing technology and design options for optimizing the benefits and mitigating the risks of CBDC issuance. That's certainly a topic of great interest for central banks around the world, for the BS in general, and as you just heard from our General Manager, Agustin Karstens, in particular for the BS Innovation Hub. Let me start by thanking the Bank of Indonesia and the Indonesian G20 presidency more generally for joining forces with the BS Innovation Hub in organizing this TechSprint. I also want to thank the opportunity to thank my colleagues from the Strategy and Operations Unit and the Singapore Center of the BS Innovation Hub for their efforts in bringing this event on the road together with the Bank of Indonesia and other partners. As our General Manager, Agustin Karstens, just said, coordinating this event with the G20 is a great honor for the BS Innovation Hub. Much progress has been achieved already via projects such as those of my colleagues in the London, the Nordic, the Singapore, the Swiss, and the Hong Kong centers of the BS Innovation Hub. But there is need for further public-private sector cooperation in many areas, including, but certainly not limited to, effective and robust means to issue, distribute, and transfer CBDCs, securing offline CBDC payment solutions, and improving interoperability more generally. We have just heard the announcements of the winners of this year's G20 TechSprint, and it's a special pleasure to moderating this panel that features both the three winners and leading policymakers in this area. I very much want to join the BS Innovation Hub in congratulating the winners for their excellent projects, and we will hear more about them just in a bit. As was just said, I'm Raphael Auer, head of the BS Innovation Hub Eurosystem Center, and I will be moderating. And I'm joined by Jota Nasser from the OECD, Sonia Davidovich from the BS Innovation Hub, Lone Wong from Dragonfly, Saxon Bartrop from Partior, and Jerome Eigenbaum and Baker Nanduro from BIT and IDEMIA in turn. Let me note that just like me, all the policymakers on this panel will present their personal views and not necessarily those of their institutions. We have a rather large number of participants in this panel, so we'll need to keep a close eye on time management. Our panel will have three parts. We'll start with the policy perspective, with Jota and Sonia each speaking for about 10 minutes on a topic of their policy experience. Then we'll turn to the industry perspective, and the three winners of the G20 TechSprint will each have about 5 minutes to speak about what their solution is and how it contributes to solving a real-world hands-on issue. And last, we'll have about 10 minutes for a general Q&A with the audience. So with that said, let's start with a policy perspective. I believe there is some information on the speakers. I'm not sure when you want to run this. Otherwise, I'll just introduce the first speaker. It's Jota Nasser. She's a policy analyst at the Directorate for Financial and Enterprise Affairs of the OECD, and she leads the fintech expert groups of the Committee on Financial Markets. Prior to joining the OECD, she was an investment banker working for the M&A departments of Merrill Lynch and Citigroup in London. She holds an MBA from ESSEC Grande École and an MSc in Accounting and Finance from Athens University of Economics and Business. Jota, let's think a bit about the history of CBDC. And certainly, it must be admitted. Okay, so thanks again. So a little introduction of our panelists and the firms. Let's go to the panel. Jota, let's think a bit about the history of CBDC, and here certainly we must admit that it was privately issued coins, cryptocurrencies starting with Bitcoin, that have really acted as a catalyst, or that paved the way for the public discussion on CBDC. But after a decade of these cryptocurrencies, or even 13 years, what can we learn from the technologies that have emerged in Bitcoin and further developed through the development of decentralized finance? What are the current technologies that should be implemented for optimizing the usefulness of a CBDC, and how much crypto is in there? And how could such useful features interact with macro-financial aspects? Jota, thank you very much for being with us today. The stage is all yours.
Thank you, Rafael. Hello, everyone. It's a huge pleasure and honor to be here today. And let me start by giving my congratulations to the organizers of this TechSprint, Bank of Indonesia, and the BIS Innovation Hub teams for the impeccable organization. And congratulations to the winners, but also to all the other teams that participated in this TechSprint. The projects were all amazing. I followed the TechSprint as part of the judging team, and it has been a fascinating experience. So well done, everyone. So your question, Rafael, is actually a very timely one. For the OECD perspective, as we only last week discussed the learnings of the recent crypto winter at the OECD Committee on Financial Markets, which has been looking into the digital asset space since the ICO boom of 2017. So going back to the very early days of these markets, crypto assets were initially conceived as a way to perform payments and transact in a faster and cheaper manner, in a way addressing this persisting need that we have for cheaper payments, especially at the cross-border level, for international remittances, for cross-currency payments. So while this was the concept, of course, in the end, the crypto asset markets ended up being driven mostly, if not exclusively, by speculation. So this is not surprising, given that the huge structural limitations that the markets for crypto have, even at the technical level that we're discussing here today, and which limit their ability to be a serious alternative to central bank money. For example, if we mention transaction costs of these kind of operations, we're all familiar with network congestion, with increased gas fees, depending on the timing that we want to transact, the price of the underlying crypto and all that. Such increased fees are a huge obstacle to small transactions. And retail users, like the general public, wish to execute small value transactions and may be faced with disproportionately high fees. We sometimes saw fees greater than the amount of the transfer itself, which is effectively pricing out this kind of of users. So the purported benefit of financial inclusion, which is one of the problem statements of our TechSprint here, has not materialized with crypto and has not materialized with decentralized finance or DeFi markets either. We have evidence of DeFi protocol activity being dominated by large players, by professionals and institutionals, and only a very small minority of activity in DeFi corresponds to small-sized transactions, which we can say is a proxy for the average user of the public. Of course, that is not to say that there is no potential for financial inclusion in such decentralized finance markets, but we have not seen material effect as of now. And on top of that, we also witnessed important scalability questions, operational issues. Over the past weeks, we have been seeing network outages, and these are not things we can actually accept when we're talking about real economic activity, such as payments. There is no room for failure when it comes to servicing the public interest more broadly. And related to that, we have also observed huge vulnerability in terms of market integrity in markets for crypto, especially when we looked at the failures of the recent crypto winter, both in centralized crypto, but also for DeFi structures that, by the way, are decentralized in name only for the moment, with clear centralization, both of control over protocol and control over user assets. So turning to the part of your questions about what kind of positive innovation we can borrow to maximize the kind of CBDC advantages. I painted a rather gloomy picture of the past experience of crypto asset markets and decentralized finance. But of course, there is an amazing level of technical innovation involved in these markets, and we can definitely draw for some of this innovation, but in a safer context. And in order to do that, we need a reliable basis as the foundation on the basis of which we can actually build innovative products and services in a safe and robust way. And that foundation is central bank money as the anchor, as it is commonly said. So perhaps if I use the parallel of stablecoins to explain this point, stablecoins could be a very useful, innovative tool to allow for the payment leg of atomic settlement. And this relates to the problem statement of the TechSprint that has to do with issuance, distribution, and transfer. So in order to have this instant and simultaneous delivery versus payment for tokenized transactions without leaving the chain for the payment leg, we can actually ensure that we can fully reap potential efficiencies of atomic settlement. But stablecoins are a massive source of vulnerability for these markets, and we know that they carry great risk of spillovers to traditional markets, given the composition of their reserves. So in essence, the stablecoins are also borrowing their credibility from central bank money, which they are referencing, without any of the protections of central bank money, such as, for example, lender of last resort. So there is merit in fulfilling this function of the payment leg of a tokenized transaction with wholesale CBDCs, which limits all the risks that are associated with stablecoins and offers a more trusted and a more reliable and safer settlement. And over and above this, it eliminates counterparty risks and reduces credit risks. And all that is what we've argued also at the OECD Committee on Financial Markets since the early days of tokenization discussions, when comparing stablecoins and wholesale CBDCs for this payment leg of tokenized transactions. So going back to the last part of your question, we don't just need faster and cheaper tools to transact, we also need them to be safer and reliable. And CBDCs are well placed to produce both the technological benefits and all the nice innovation aspects we saw at the crypto asset markets, while at the same time ensuring there is safety and integrity that is needed for these kind of purposes. So what we can borrow in terms of technological characteristics from crypto and DeFi would relate to functionalities of smart contracts, to programmability as the key technological innovation, in my mind, allowing for combined transactions, for conditional transactions, and for functionalities and flexibilities at a level that we have not, that we do not have at the moment, and that we actually witnessed in the solutions of the participating teams in this TechSprint. Interoperability with technology offering us the possibility to have multi-CBDC solutions, such as the ones that you're testing at the BIS Innovation Hub, linking systems at the cross-border level, but also linking back to existing infrastructure such as RGTS systems. And of course, cryptography and cryptographic techniques are actually at the core of this whole area of innovation, and it becomes particularly important when it comes to innovation that allows for privacy, for instance, zero knowledge proofs. And to close on this part of potential risks, if we overuse any possible CBDCs in the future, in order to avoid any effect on credit intermediation or on monetary policy transmission, of course, again, technology can allow us to have options that address this kind of risks. For example, pricing, distribution decisions over interest rates, all that allowed through programmability that we mentioned before, and even limits to holdings to prevent CBDCs from becoming an investment asset in and of itself, which was actually the case with crypto assets over the past decade. And I'll stop here. Thank you.
Thank you very much for this very intriguing thoughts that are certainly very much aligned with the messages of a recent special chapter in this year's annual economic report on the future of money of the BIS. There is a lot of innovation, but what is missing is stability and scale, which central banks, for example, could deliver and underpin this system to harness this innovation more broadly for society. I'm sure that there will be many follow-up questions by the audience on this issue, and I already see some in the chat. Let me remind everyone, we'll collect all of them at the end of this panel. Before that, I have the great honor of introducing someone I've known in the CBDC space for a long time, but who has recently become a colleague of mine. Sonia Davidovich is an advisor in the Singapore Center of the BIS Innovation Hub, and she's also seconded from the MAS of Singapore and on leave from the IMF, where she worked as an economist and digital expert on transformative technologies. In addition to numerous analytical and research papers on financial technology and digital currencies, she has also contributed to the G20 agenda to enhance cross-border payments, and it's a great pleasure to welcome her back also with this in mind. But most recently, she also worked as a market infrastructure expert on the digital euro at the European Central Bank. So Sonia, you combine experience at the BIS, at the IMF, at the MAS, and at the ECB. You're the right person to ask some questions on the fundamental design choices of a CBDC. Based on your experience of, on CBDC developments, are there like general considerations for CBDC issuance, general principles that maximize the benefits while they minimize the potential downsides? How could you design a CBDC to maximize its potential for improving cross-border payments? And what are the specific technological aspects in design to minimize spillovers when it comes to currency substitution? Sonia, the floor is all yours. I can't hear you, Sonia.
You hear me?
Yes, now I can hear you. I think see others nodding too.
Okay, great. Sorry about that technical glitch, but again, a pleasure to be here. I'm delighted that we're colleagues now, Raphael, and I'm pleased to be a part of such a distinguished panel. And congratulations to the winners, and congratulations to Bank of Indonesia for organizing such a phenomenal event. I'm truly honored to be part of it. So you have asked a question that is probably on top of everyone's mind, but I want to qualify my answer a little bit before I go into presenting general rules or principles that apply across or around the world, across all countries. So it's important to note that there are country-specific circumstances. There's regulatory and legal frameworks, there's specific use cases, there's problems that countries are trying to address with the introduction of a central bank digital currency. It's important to keep that in mind because there's no one-size-fits-all for all countries that works for all countries in all circumstances. As we all know, there's different use cases that countries are trying to tackle with the introduction of a CBDCs. There's different problems they're trying to solve. Hence, the principles or the general rules that will apply for a CBDC will be different across countries. But if I can try to generalize what some of the foundational principles were to be, I would start off with three main principles. The first one is that its introduction of a CBDC shouldn't do no harm, meaning it should not have an adverse impact on wider policy goals that a country has. For example, central banks, a lot of central banks within their mandate is price stability and safeguarding financial stability. So there should be no adverse impact on those on that mandate. And a CBDC should not impede other central bank functions. As we may know, There's a reserve management function. There's running or operating or monitoring payment systems and so on. So CBDCs should ideally work in tandem or in harmony with these wider policy goals. The second principle is working or being compatible and working together with other forms of money, meaning private money. So we now have a situation like in the status quo where public and private money coexist together. So we have banknotes and reserve settlement accounts that operate together with commercial bank deposits, which is a form of private money, and that should be the case and remain the case in the digital realm as well. So there shouldn't be a CBDC sort of impeding the coexistence between the two different forms of money. And lastly, I think it's important to keep in mind that although not a typical central bank purview, like it is important to remain competitive and innovative to promote like the most efficient and effective payment system within the economy, so that consumers are not, because of the lack of innovation, are not drawn to or not want to like less efficient or less safe payment systems and assets. And so those are kind of the foundational principles, but like how do you achieve that? I mean, the overarching goal, and this was part of the introduction video that we saw, is to instill trust and safeguard the credibility and reputation of the central bank. And that is something that kind of differs for central banks when it comes to private payment systems providers or private forms of money. Like it's a huge reputation and credibility at stake for a central bank. It has to be done right from the beginning, and that is something that is paramount for any central bank thinking about central bank digital currency. So I just want to highlight three main design features, which in my opinion are the most important in wanting to promote those foundational principles that I just mentioned, and also in wanting to instill that trust and safeguard the credibility that is so necessary for a central bank that is the lender of last resort in an economy. The first one is operational resilience and cyber security. And by that, I mean across the entire technology stack, both for businesses, processes, and people, but also more general and analyzing like the entire framework that could be a source of risk, any dependencies that might impact operations of the central bank when it comes to CBDC. So really the wider view of the entire ecosystem of stakeholders and players that are involved in issuing and distributing, providing CBDC, be it to the end consumer in the case of retail, or in the more closed circle of financial institutions for the wholesale CBDC. One example that comes to mind is the outage of the Dcash system for almost 3 months that happened earlier this year, which needless to say was very disruptive and brought the whole system down. So those are because of an expired certificate. I mean, our colleagues from BIT are here. I'm sure they'll know more about it. But these are just one point to bring up that it matters. It matters a great deal, and this is why I placed it at the first position in terms of like the design features that need to be looked at more carefully when thinking about CBDC. The second design feature is mechanism to protect financial stability and safeguard the financial system as a whole. And those could be various design features, such as, for example, holding on transaction limits. I think Iota mentioned that earlier, tiered remuneration, and other potential mechanisms that could be introduced to ensure that there's not a huge run away from bank deposits into central bank digital currency, which can be extremely disruptive to the wider financial system. and lead to a severe disintermediation of the financial sector. And then lastly, the third design feature is design flexibility. It might seem like, just a buzzword, but it does pose a great challenge if systems are designed in such a rigid way that years later down the line, when there are changes in regulation, changes in technology or in standards, it is extremely costly and extremely cumbersome to rework the system to adapt it to that change. So I always say it's best to leave ample space and flexibility in the design so that features can be enabled or disabled depending on the situation. And then this last feature, design flexibility, matters a great deal, I think, in the cross-border context. Because at the moment, as you may know and others may know, in the retail space at the very least, central banks are mainly focused on domestic use cases. Very few are really considering the international component or the cross-border component. And that just goes to show how important it is to, when designing a domestic CBDC for domestic use, to leave that space, to leave that flexibility to potentially enable interoperability with other payment systems, with other CBDCs, potential integration with legacy payment systems, and allow for some form of standardization when these standards are set up by lots of the international fora and working groups that are currently working very hard in the context of the G20 agenda to enhance cross-border payments. So once those standards are up and running, it will be a whole lot easier to integrate them into the CBDC system and truly make that CBDC easily interoperable with other digital assets, with other CBDCs, with other payment systems. And I think the BIS Innovation Hub and General Manager Carson's really highlighted a few projects that show how that interoperability can be operationalized in the various projects that the BIS Innovation Hubs are working on, such as Helvetia, that shows that integration of CBDC into a core banking system is possible and viable, and there's a role for wholesale CBDC to be played in the DLT environment. And then, of course, Project Dunbar and mBridge that are showing that multilateral platforms can enable the use and the transaction between two or more central bank digital currencies. And then, of course, one project that was particularly standing out, I believe, is Project Icebreaker. It's sort of looking at the retail cross-border dimension, which is kind of a unicorn out there, as most of the cross-border CBDC projects are more in the wholesale domain. So this is just to say that for cross-border, truly central banks have the chance to start with a clean slate. They have the chance to design a CBDC from the get-go with that interoperability aspect in mind and coordinate with others. Yet it's very hard to achieve that because most of these use cases, as I said, are tackling a real-life domestic problem, a use case that is pertinent for that economy. And this is why it's paramount to leave that space, to leave enough flexibility in the design so that we're not, that central banks are not challenged with very high, extremely difficult, cumbersome, and expensive reworks later down the line. And finally, I want to close with your question, like what are some of the designs that could enable cross-border interoperability or enhance cross-border use of CBDC. I mean, at the moment, thinking around how to make that happen. What are kind of the technology?
Sonia, sorry.
The solutions that are out there and that can be used. Yes.
And sorry, I think sometimes your connection is lost. I'm not sure if it's my problem but I think there is a couple of people who have, who are nodding now. So that was just the last bit. Maybe anyway, we're running out of time. Maybe you can wrap it up, and let's hope we get better connectivity once the Q&A is up.
Oh.
No, sorry. I'm sorry. I can't hear you. I think others are nodding. So there, but we heard.
Yes.
You can hear her? No. Okay. So Sonia, at the moment we're having a bit of difficulties listening to you, but we got most of your interventions. I want to thank you very much for this grand overview of how a CBDC should be designed from basic principles. As you said, the overarching goal is to instill trust into the payment system. And as you also said, in doing this, there are many practical issues that need to be overcome. And we need an agile design approach that allows to flexibly accommodate practical issues as they emerge. So it's now time actually to turn to this practical perspective. And with this, to our winners of the G20 Tax Frame, again, congratulations. I'm just gonna, introduce each of you very briefly, and maybe then you could spend, really 5 minutes maximum talking about your solution and how you tackle the problem. Let me start with Team Dragonfly from Singapore, who won the category Effective and Robust Means to Issue, Distribute, and Transfer CBDCs, and with their end-to-end CBDC solution. Dragonfly is represented by Lon Wang, the FinTech CEO. Please, Lon, take it away. Maybe
you're on mute. Yeah, he's on mute.
we still cannot hear you.
Sorry.
Yeah, now it works.
Okay. Yep. Sorry. I got it on mute. Good day, ladies and gentlemen. The topic I'm going to address is on how we might implement an optimal CBDC solution. Now, we'll address this in pertinent to Indonesia. Some of these points have already been covered by Iota and Sonia, but I will nevertheless emphasize how they are also important for good implementation. Indonesia has been accelerating at a very fast pace in the last 8 years with the declaration of the national cashless movement. To that end, Indonesia is well positioned for the next stage of its digitalization program. For any country to embark on CBDC, it is my opinion that the implementation be a self-contained initiative. Additionally, the solution must be able to connect to the web of legacy financial systems that are already put in place. So it is therefore quite mandatory that a highly flexible, scalable, and compatible bridge be built between legacy systems and the CBDC systems for interoperability. So accordingly, the rollout should be one that is convergent between legacy systems and the CBDC system. So apart from putting the law and regulatory requirements in order, there are three considerations that we should take cognizance of when it comes to deployment of a CBDC system. And these are, one, the cost associated with the rollout, the technology used, and the deployment itself. So the cost, now the financial burden of a major CBDC rollout, especially for huge and spaced out archipelago like Indonesia, can very quickly add up and can cost the country hundreds of millions of dollars to deploy. So consequently, it is important that the design should not only be efficient, but the cost of implementation, maintenance, and operation of the solution should also be taken into account. So in other words, this is basically a lowest attainable total cost of ownership. When it comes to the technology consideration, a CBDC solution should be a disruptor. Could be a disruptor, and it may cannibalize the billions of dollars poured into existing systems. It is therefore very important that the technology used should be interoperable with at least some of the existing financial systems. The technology should be distributed and decentralized so that there is no single point of failure. An example would be that no CBDC edge servers should sit in the premises of the service providers, where a failure will result in the inability to carry out any transaction. Even if the system is offline, there should be a means to carry out a transaction in a dual offline transaction mode. And the system should also include the use of other devices such as NFC cards to transact, instead of just using smart devices like the mobile phones. The system components should be kept to a minimum, simple, and inexpensive, preferably in a cloud environment within the country. And payment service providers as well as financial institutions should be given some flexibility in the technology used for the CBDC without requiring implementation of expensive CBDC edge servers in their premises. In a geographically expansive country like Indonesia, the design should be a cluster of network clusters. In other words, multiple islands of network clusters of servers for high throughputs and reliability. This is similar to how internet is being designed. So the entire solution should be designed like how the internet is designed, as in the case of routers being put everywhere within the system. So the user experience should be seamless and therefore easily transacted across the nation. So a payment settlement rail should also be put in.
Dylan, thank you very much. We need to cut it a bit short because we also want to have a bit of discussion. Thanks very much. It's certainly fitting that the solution you lay out has an island, sort of is shaped like many islands in a G20 Tax Sprint hosted by Indonesia, the archipelago. I think it's also important in a sense that when we think about these designs, there are many aspects, right? We need to sort of think about the basic architecture of a CBDC. What is sort of the baseline case? What is the overall end-to-end solution that we perceive to be the standard way in which payments occur? But there are also financial inclusion aspects, resilience aspects that come to special cases such as offline payments. And with that, I want to move to the next winner, BIT IDEMIA, who won the Enabling Financial Inclusion category for the solution of securing offline CBDC payments. We're joined by Jerome Argenbaum and Baker Nanduro from BIT and IDEMIA in turn. Please, the floor is yours. We want to have some discussion, so I'd kindly ask you to be brief.
Okay, great. First of all, congratulations to all the fellow participants, and thank you BIS and Bank of Indonesia for organizing this great TechSprint. BIT is a market-leading CBDC platform with deployments in 12 countries across 3 continents. We have the largest live deployment outside of China. Financial inclusion is something that we deeply care about, and our partner IDEMIA deeply cares about. And when we talk to our clients across the world, I mean, it is something that we hear loud and clear that a platform has to support it. Our platform, when we think about supporting financial inclusion, we think in 3 different categories. The first one, Governor Perry and Sonia referred this, it is get the CBDC design right. And when we design CBDCs, we think about wallet hierarchies. Let's make sure we create different types of wallets where there are wallets that processes. So as long as the wallet hierarchy is designed right and in a thoughtful way, we can drive inclusion. The second category we talk about is accessibility. For inclusion, it's important to support broad devices like non-smartphones and have offline payment devices, and make sure that any wallets and mobile apps that people are using, they're very easy to use, that anybody can use it. That accessibility is important. The third one is convenience. Look, in the end, if people should use it, people should be able to use the currency in every corner, in every location. So having the right government agencies and money operations to jumpstart the CBDC usage across is very important. And also a lot of innovation with the FIs, with a lot of SDKs and APIs in the platform to bring the new type of use cases is very important. And also just integrating with the existing banking ecosystems is very important. Again, having the right design, thinking through the accessibility for inclusion, and then also making sure that the convenience exists, with the overall ecosystem makes financial inclusion possible. We see that happening already with many of our clients. With that, let me hand it off to Jerome from IDEMIA. Jerome.
Thanks, Baker. Thanks to the organizers. Yeah, you mentioned, Baker, offline, and in the previous presentations, Governor Perry mentioned offline, General Manager Customs mentioned offline. Why is offline so important to achieve financial inclusion? We'd like to summarize it in a very short formula. We want CBDC to be available anytime, anywhere, and for everyone. Anytime, anywhere means if you don't have a network connection, you should be able to pay. Because today with cash, you can pay offline. You can pay anytime, anywhere. Meaning that you can pay, and the payee can become a payer, can retransfer. The number of ops can be unlimited unless for security or traceability reasons, the central banks wants to put a limit. But otherwise, it should be unlimited. This is anytime, anywhere. It's also a matter of resilience. If there is an issue with the system, you should be able to continue transacting. For everyone, of course, is extremely important when it comes to financial inclusion. We love smartphones. Smartphones have a very convenient way to use CBDC, but we need to understand that everyone will not be able to own a smartphone, either because they cannot afford it or because they don't have the technical literacy, they are not comfortable with using one. So we want everyone to be able to use CBDC. It means maybe using a feature phone, a low-end phone, or maybe just a plastic card, a very simple plastic card that anyone can tap or insert at a point-of-sale terminal or on a mobile phone to do a peer-to-peer transfer. It could be many other devices, a watch, you name it. Even machines, we believe, would pay tomorrow. So this is what we call IoT. A machine should be able to pay. So financial inclusion is really about bringing this technology to everyone. And the last point I want to mention is privacy. Privacy is always mentioned as a key design factor for CBDC, and offline, as we all know, is a great way to achieve a very high level of privacy. Thank you.
Thank you very much. To build a successful CBDC, You need to know your architecture. How do you want the public and the private sector to work together? You need to have a resilient infrastructure that sort of flexibly accommodates all the various problems of offline payments and so forth that may come about. You need to think about an access framework that really makes the CBDC inclusive. We've just heard that. But certainly also people in one payment area will want to interact with people in another payment area. And you need to think about connectivity and interoperability. And this brings me to Team Partior from Singapore, who won the Improving Interoperability category for their solution project Naucratis, enabling connectivity and interoperability for MCBDC. I would like to give the word to Saxon Bartrop, the head of architecture and design and TechSprint team leader of Partior.
Well, thank you, Bank of Indonesia, BIS, and fellow TechSprint participants. So firstly, a bit of background. Partior is a global blockchain network for interbank clearing and settlement. So our solution is unique, and I guess our thinking around CBDC interoperability and connectivity is unique in a number of different ways. So to start with, there is no one-size-fits-all solution, as Sonia mentioned. We think to CBDCs. So our solution supports both tokenized and account-based systems concurrently. Also, commercial money and interoperability between commercial money and central bank money, I think, is essential to have a usable system globally. So second of all, integrating with RTGS. So, and integrating with RTGS, we think is crucial to enable a phased transition towards CBDC. It's not feasible to have a big bang, a cut over to CBDC domestically, or not, certainly not globally. So we think that's an absolutely crucial point, to like a hurdle that needs to be resolved up front to enable a shared liquidity pool for participant banks, for commercial banks, rather than splitting their liquidity, and enabling interoperability between CBDC network participants, non-CBDC network participants. So in addition to that, from an overall design point of view, we see a decentralized governance model being necessary to enable a federated type of approach to a global multi-CBDC network protocol or scheme to enable disparate monetary policies and design decisions and policy decisions to be affected as required by central banks domestically. So, in addition to that, we see an open network design being absolutely central as well. So this is to enable the proliferation of use cases such as PVP, DVP, which are very much concentrated on the CLS currencies. In order for the non-CLS currencies to be addressed and the the costs of those currencies, processing those currencies across borders, be brought down. So we see an open network type of architecture being required, so that a greater inclusion of the global economies can be achieved, and to further enable more advanced use cases such as automated market making, liquidity pooling, which we think are also central to achieving a reduced cost of cross-border transaction processing. So I'll leave it there for the moment.
Thank you very much. So the audience, you've heard the policy perspective, you've heard the industry perspective from our great winners. I want to thank all the participants. We now have a few minutes left for questions and answers. Unfortunately, not enough to answer all the very relevant questions that I see here. So I'm going to summarize this a bit. Having gone through the Q&A, I think there are two broad areas where we see a lot of questions. And the first is that there are a number of questions on how the public and the private sector can work together best in the CBDC. And I'm going to ask my two policy panelists for a 1 minute for a 60-second answer on that. And then the second area is, and there are surprisingly many questions on this, is on the dangers posed by the rise of quantum computing for CBDC and payment systems more generally. It's very interesting. Also, the Eurosystem Center of the BS Innovation Hub has a major project on quantum computing and the threat it poses for communication. And I'm going to ask this, maybe phrased a bit more generally, to our three technologists. And again, I'd like to have a 1 minute answer, a 60-minute answer from each of the panelists. So let's start with the policy panelists. Sonia and Jota and Sonia. Let's keep the order of how we spoke till now. How do we split responsibilities between technology providers and central banks in order to manage trust by the public in the CBDC payment system? Jota and Sonia, please.
That's a very interesting question. I will not go into the detail of splitting roles, and I would rather keep it high level to mention the importance of cooperation for this kind of technical projects where we cannot get it wrong is of paramount importance. There is definitely an element of upskilling from the authorities' side that needs to also be looked into while we think about deploying this kind of solutions within nations and across nations. So there is an element of building capacity at the authorities level. And this is where actually projects that bring together public and private sector, such as the pilots that are run in the different regional BIS innovation hubs, are actually super important as a way forward. But I would rather not get into the nitty-gritty of the split of responsibilities.
Thank you, Sonia.
So I'm a big believer in playing into your competitive advantage to your strengths, and I believe the private sector is well positioned to perform the roles of onboarding, AML, CFT checks, as has been the case up till now, and then obviously providing the technology solutions that we or the whole world will be using to design and distribute digital assets. So playing into the advantage, the strengths and the competitive advantage of each determine the roles. But at the same time, we have to be mindful of third-party dependency and risks. So it's important when thinking about technological solutions that preempt strong vendor lock-in, where we're just committed to one solution, one vendor, and also thinking about a framework that clearly specifies what would redress issues, like who's sort of taking on responsibility if things don't go the way they should, and designing that framework with this operational resilience in mind. On the question of quantum computing, just real quick, this is where the design flexibility comes in again. When developing the algorithms, it's important to keep in mind that these algorithms will have to be adjusted and adapted to a moment when quantum computing becomes more prevalent. So there again, flexibility in the design of algorithms becomes an important topic. Thank you.
Thank you very much, Sonia. It's a great transition to go to this technical aspect. So we've seen many questions narrowly on the risk posed by quantum computing and how it endangers today's encryption standard. But actually, I wanna phrase this more broadly. How large do you perceive this risk, and how does it rate to other technical risks you have identified in your applied research and development work? Or if I want to put it differently, what is actually the largest technical risk that you see? Again, please, in the order of appearance that we had previously, and very, very brief because we're running out of time. Thank you. So it would be long first.
Thanks, Rafael. I would be inclined to think that the technology is still quite a fair bit away, but nevertheless, We can never say when this can happen with the quantum computing. But it is all about the increasing the size of the private key. If you double the size of the private key, it could then extend the time taken to crack a private key into infinity again. Because you're basically multiplying it by a factor to the power of, say, another 256, right? To make the cracking of it a much longer time to do. It could be in another billion years again. So the quantum computer will be chasing that instead, rather than the other way around. I would envision how this will work.
Thanks. Jerome, you want to go next? Or Baker, whoever you feel is more qualified.
Let me take this. So I don't see it as a big risk. It's not the biggest risk that we have for CBDC at this moment. Most of the CBDC implementations are private blockchains. So there is a lot more security controls that you can put in place. There are other bigger risks that we need to solve from a scalability and performance and things like that, once we bring in more countries into the mix. But this is not the one that is highly relevant at this time.
So there is a layered approach, of course, to security. You need to have different layers of protection. Quantum is something that is known today. At IDEMIA, for example, we have been producing devices that use new algorithms that are quantum resistant algorithm. For example, we issued a 5G SIM card that is quantum resistant, and I invite you to have a look at our website if you want more details. So it's coming, not right now, we have time, but we need to take this into consideration now, and we are doing it.
Thank you. Saxon.
Yeah, quantum computing, I think I agree with the other panelists, the other winners. So there's quantum safe algorithms out there. And so it's not really a huge challenge at this stage, I would say. And we're in pretty good stead, actually, given that there's already quite a lot of research and development in the post-quantum safe algorithm space. Was there another question, actually? Or was that...
No, yeah, that's good. If that's good enough. So we've seen 3 or more consistent views that sort of quantum computing is a threat, but it's far off. And I think I want to sort of summarize our panel here. But I think sort of when central bankers start thinking about CBDC, the basic consideration is that people trust in the unit of account, in the anchor of value that central banks offer, and central banks sort of want to extend this to the public. In doing so, we need to together work out a public-private sector cooperation, an arrangement that can be trusted to sort of deliver that stable value to the public in a fair, in a competitive, and in a resilient manner. And we need to have trust in the technological system. So I think that sort of delivers this arrangement to the consumer in the form of handheld devices, in the backbone infrastructure, and so forth. So summing all this up together, the policy and the industry perspective, I think it still always comes down to trust in the element, the fundamental reason d'être for central banks. And I want to thank my participants for sort of bringing together the various parts of this trust, for participating in the G20 TechSprint. Also, Jota, thank you very much for being a judge in this. And I now have the great pleasure to hand over back to the moderator. Thank you very much. Again, thanks to the Bank of Indonesia and the Indonesian G20 presidency. It's a great honor for the BIS Innovation Hub to participate and collaborate with you.
Thank you. Thank you.
Thank you, Rafael Auer, and all speakers for the very insightful session. Ladies and gentlemen, once again, let's give applause for our moderator and speakers. Right, we hope you are ready for our second casual talk, and this upcoming session will uncover the topic of boosting financial innovation through CBDC technology and programmability features. And to lead the session, I will hand the session over to our moderator. He has a combined 27 years of experience in banking, consulting, technology strategy, and also management. One of his key milestones is developing Singapore FinTech strategy roadmap with the Monetary Authority of Singapore. He is a former principal of A.T. Kearney, CIO of Commonwealth Bank of Australia, and partner at Deloitte Consulting, and currently working for a project at Google Cloud. Please welcome Mr. Eric Koenen.
Thank you, Wayu. A warm welcome to our studio audience and our virtual guests for tonight. My name is Eric Koenen. I will lead this evening's casual conversation with the topic boosting financial innovation through central bank digital currency and technology and programmability features. And thank you to Bank Indonesia and BIS for the invitation. As mentioned in the previous sessions, many central banks are innovating with digital currency, CBDC, to preserve access to public money and increasing digital economy. And the last count, and I think Mr. Carson said it as well, is that there's 102 central banks working on this topic at the moment. In doing so, central banks must consider the technology and the features to optimize its application and supporting the central bank's mandate. In order to discuss that in this casual talk, we have three distinguished speakers and experts in CBDC design. The first speaker will be Benedict Nolens. She is the head of BIS Innovation Hub in the Hong Kong Center. Prior to this appointment, she was the managing director at SC Ventures, the innovation arm of Standard Chartered Bank, focusing on digital banking, banking as a service, and blockchain. And prior to that, she was the vice president of international government relations at Circle, involved in the evolution of blockchain and digital assets. Our second speaker is Antoine Martin. He is the financial research advisor on financial stability and policy research at the Federal Reserve Bank of New York. He received a PhD in economics from the University of Minnesota. His research interest includes money and banking, financial intermediation and payments, and he joined the Fed in 2005. And our last speaker will be Mu Chan-chung. He is the appointed Director General of the Digital Currency Institute at the People's Bank of China. He joined the People's Bank of China in 1995. He is also a member of the Committee on Payments and Market Infrastructure at BIS, a member of FSB Financial Innovation Network, and also a member of IMS High-Level Advisory Group on Finance and Technology. The format of today is that each of the speakers will be asked to present for approximately 10 minutes. After three presentations, we will continue with the casual conversation, and therefore I would like to welcome all three speakers to the online stage. I'd like to invite Benedict Nolens to the stage to kick us off with the first presentation. A warm welcome, Benedict. I think you're calling in from New York, so it must be already pretty late. The stage is yours. Welcome.
Hello. Hi, I'm actually dialing in from Hong Kong, and I think you're probably also a countrymate of mine. So I think people are going to hear a lot of Dutch accent in the next few minutes. So first of all, thank you all for inviting me here. It's an absolute pleasure, and it has been an absolute fantastic event so far. I certainly have enjoyed it myself and learned a lot. And I look forward to seeing all the solutions advertised and showcased. So today I will be sharing with you a bit of information on a project we've been working on, which is the mBridge project. And I will also be touching on the Orion project, which is the second project that we're working on. So next slide. I think some of the speakers have touched upon cross-border payment remains quite cumbersome. So it remains characterized by relatively high costs, low speed and transparency, operational complexities, and to a certain extent, limited access. As shown on the bottom of the slide, in fact, the correspondent banks have been retreating across the world, and specifically from jurisdictions where they see that there is a higher risk. In some, when they feel the risk reward on the compliance and this is not worth it, they tend to retreat from those jurisdictions. Next slide. So one of the solutions that the BIS-IH has been investigating across its centers, and that includes the Hong Kong Center, the Singapore Center, and also the Swiss Center, is whether multi-CBDC approaches can improve this issue. So the project I'm presenting is Project mBridge, which is a joint collaboration of the HKMA, the Bank of Thailand, the Central Bank of the UAE, and the PBC. And the BIS is acting as a coordinator for the project. We currently also have 9 observing members, of which 5 are central banks from Asia, and we have 4 representatives from the Americas, Europe, and the Middle East. In sum, we're seeking to have a broad and a very representative representation on our observer member group. Next slide. So this project is actually quite a long journey. It started in 2017 with the first prototype. And that prototype was led by the HKMA. It was followed in 2018 with a second prototype by Thailand. And in 2019, these two decided, let's work together and connect what we've learned in a cross-border context. And in 2021, in fact, the BIS Innovation Hub became more active together with the joining of the CBUAE, as well as of the Digital Currency Institute of the PBC. So you can see the 3 reports that have been issued, but I would say we have another one coming very, very soon, so stay tuned. We're actually working very long hours to get our next report out. Next slide. So the concept generally of a multi-CBDC platform is to put central banks together and have them issue a CBDC on the platform, such as to facilitate PVP transactions on the platform, atomic PVP. In sum, substantially speeding up these transactions and in the process reducing cost. That is the general concept, and you see that represented here. So we represented this with a bridge, and which is exactly why we called the project mBridge. So next slide. Oh, maybe if I stick just for a moment on that prior slide, as also emphasized by one of the prior speakers, by Sonia in particular, it is very important that as part of building such a platform, we do respect currency sovereignty and the monetary and financial stability of each of the participating jurisdictions. So this is for sure one of our core principles. So do no harm is a core principle. Compliance is a second core principle. And the third core principle that we work on is interoperability. I would say that this kind of a platform, by being a bridge, is you could say, interoperable by design. So it is an interoperable platform right there. So on this slide, you can see the governance of the project. So in sum, the BISIH Hong Kong Center is acting as the coordinator, and we do have representatives from the 4 participating central banks who are each picking up a core topic. So for example, the CBUE is picking up the business use cases. The Bank of Thailand is focused on policy matters. The PBC is assisting on the technology matters. And the HKMA is assisting on legal matters. Next slide. So the core structure of this kind of a platform is not surprisingly what you see on this slide. So you see the central bank sitting in the middle issuing the CBDC, but they do so at the request of the participating banks who are also a participant on the platform. And then you see the clients of those banks are those enterprises that are seeking to send this money through, let's say, across the borders or through the world, and they request in some for their banks to perform these transactions. They are not on the system themselves. In some, this is, as people would call it, still a two-tier and an intermediated system. And this is to address many of the issues that, again, were raised on the prior panels, including the importance of, for example, compliance matters, AML matters, etc. So next slide. So this project, as I said, has been working for quite a while, but in the past year, we've completely redesigned the system. And the system is now, it's the IP of the central banks. So it's built by central banks for central banks. And at the end of June, we started a pilot. So in some, we started heavily working with 20 commercial banks to do actual real value transactions on the platform. Now, what we mean with that is actual payments on behalf of corporates. So these were not dummy transactions. They were actual transactions on behalf of corporates. And on this image, you see the connectivity that the platform like this can make. In fact, between 4 jurisdictions, it can make a lot of connections. 150 in this pilot case was possible. So let's move to next slide. So in this specific pilot, we tested 3 types of transactions. The first was issuance and redemption of the CBDC. That's pretty obvious. That's in some the bank going to the central bank requesting the issuance of the CBDC, and at the end of the day or at the end of the period requesting the redemption of that CBDC. The second type of transaction is cross-border payment using that CBDC. So you can see these are one-way cross-border payments in one of the currencies, one of the CBDCs on the platform. The third transaction type is cross-border atomic payment versus payment for foreign exchange between these commercial banks. So we did these 3 types of transactions. Next slide. So in terms of the statistics, we had 24 direct pilot participants. That was 20 commercial banks. And then we had 4 central banks, as mentioned. So in total, over 160 cross-border payments, again, real value on behalf of customers, and some interbank payments were processed, including also FX PVP. There were over 40 direct, unique peer-to-peer and cross-border commercial bank connections enacted. And this is actually very significant because this was in a period of 3 weeks. So while it may not look as big as a total potential number of transactions, which is 150, or connections, which is 150, in fact, 40 is a significant achievement. And so lastly, we transacted 12 million was issued onto the platform and 22 million was being transacted, again, real value. Next slide.
Left.
So where do we stand now? In sum, we are now making our roadmap for 2023. So in the agile world of innovation, work actually never stops. So it would be great if we could sit here and say we've gotten this all figured out, but we think in general that's not realistic. And in sum, we will continue further work, and that is across several matrices, you could say, but governance being an important one, legal framework and TNCs being another one, exploring more use cases, DVP could be one, for example, adding more jurisdictions. As said, we have 9 observers, 5 central banks from the region, and some of them may want to pilot as well. And we want to involve, as noted, further participants as well. So I think it's probably the end of my 10 minutes, so I'm passing it to the next speaker.
Thank you so much, Benedict. Very interesting, and especially sort of filling the void of settlement banks that are leaving some of the less developed countries. It is a very interesting use case, very impressive. Antoine Martin, can I invite you to the stage as the next speaker, please?
Sure. And I believe I have some slides as well. Wonderful. So I'm going to be talking about optimal design of tokenized markets. And this is some research that I've been doing with a colleague at the New York Fed, Michael Lee, and Rob Townsend from MIT. And I need to start by saying that these are my own views and may not reflect the views of the Federal Reserve Bank of New York or the Federal Reserve System. So next slide, please. So what I'm going to do is give you sort of a quick introduction of DLT and programmability at a very, very high level. And then I want to look at a specific example and sort of ask, well, can programmability eliminate settlement fails? So I'll explain to you really briefly what settlement fails is and why we should care. And I'm going to argue that, yes, you can, but it may have a cost. And what I'll be showing you is a simple example where programmability and instant settlement can change the informational environment. And that can eliminate not only settlement fails, but also incentive to intermediates. And so the key lesson I'm hoping you will get from this presentation is that programmability could have benefits, certainly, but we need to think about potential unintended consequences. So next slide, please. So proponents of DLTs often argue that an important potential benefit from this technology could be programmability, right? So programmability can be defined as a mechanism for specifying an automated behavior. For example, the ability to execute transfers under certain specific conditions. There's been a lot of talk about that, and I'm going to give you one specific example that applies to financial markets. But during the recent COVID crisis, a lot of people talked about potential for government aid or government support to be more efficient thanks to features like programmability. You can also imagine a situation where insurance might benefit from programmability, so that insurance could be delivered automatically to, say, farmers who are suffering from a drought or who may be victim of floods based on public information. Next slide, please. And so the specific applications, which I'll be talking about today, is how programmability could be used to eliminate settlement fails. And this is something that the private sector has been aiming to do. There are several projects like SDX, Finality, HQLAX that are focused on this idea that it would be beneficial to eliminate settlement fails. So what is a settlement fail? Well, a settlement fail occurs when, for example, a trader doesn't deliver a security that's been promised after a trade. So 2 traders will agree to a trade, but there are delays in settlement in the current system, typically 1 day, sometimes 2 days. And that contributes to fail because when it's time to actually deliver the security that had been promised, the trader might choose not to do that. And this can be a significant issue at times. For example, at the peak of the global financial crisis, in the US Treasury market, 400 billion of settlement fails were occurring per day. This led to changes and implementation of a fail charge, which increases the cost of settlement fails. Yet fails still occur. So there's a reason why people are interested in this problem. So next slide, please. So what I'm going to show you was a simple example that we have a more developed example in the paper that I'm talking about. We show that programmability and instant settlement can eliminate settlement fails, but that has a cost. Programmability is going to allow traders to commit to deliver an asset in the future, right? And the potential benefit, you can entirely eliminate fails that would otherwise arrive if the traders have different incentive at the time they're supposed to deliver that security. Programmability can force them to do that. But at the same time, programmability and instant settlement, which are required to eliminate settlement fail, they alter the informational environment, and I'll describe why they can negatively impact the incentives to trade. And in fact, they could, in principle, entirely eliminate the incentive to intermediate. So the key lesson here is really we need to worry a little bit about potential unintended consequences. Next slide, please. So I'm going to provide a really, really simple example, right? So we have two traders, A, who has an asset and is willing to lend it, and C, who wants to borrow that asset because at least for a while, C has a higher value for this asset. Borrowing and lending asset is something that happens and is fairly standard in financial markets. Next slide, please. So we want to think of an OTC market, and in this market is a trader, an intermediary, trader B, and this intermediary is necessary to borrow the asset from A, on lend it to C, and then transfer it back to A if C returns the asset, right? And the concern with settlement fail is that C might decide that after all, after the asset has been borrowed, she doesn't really want to return it because she has a high value for it. Next slide, please. And so a settlement fail would occur if C chooses not to return the asset to B as promised, right? And perhaps there's a private benefit, like C ends up finding out that she thought she only needed the asset for a week, but really it would be great if she could hold it on to it for another few days, and she might decide to do that. So can programmability solve this problem? And I'm going to argue that it can. So next slide, please. So suppose that assets are programmable and that settlement is instant, right? So when B and C negotiate the trade, then C would immediately receive the asset from B as soon as the trade is agreed, and you could program the asset so that it irrevocably returns to B at the agreed upon time, right? So in a system like that, because of the immediate settlement on the leg that sends the asset to C and on the programmability that returns the asset to B, then you would eliminate settlement fails. All of the movements of the asset would happen in a way that is intended by the contract. And so programmability and instant settlement would make, in this case, settlement fails impossible. And that sounds great, right? But programmability allows traders to commit to future behavior, but that has potentially unintended consequences. There's strings attached. So in particular, settling trades instantly means that traders need to own the assets at the time of the trade, or the rights to the asset at the time of a future trade, right? So for B and C to agree for B to send the asset now and C to return it later, it needs to be the case that B has the asset immediately and C has the right to these assets at the time to send it back. And this form of ownership data is typically private information, at least in current financial markets. And when it's not private information, when traders can know about it, then that can be exploited. Next slide, please. So too much information can kill intermediation, right? So here we think of B as is acting as a dealer in an OTC market. That means that she's buying assets to fulfill anticipated demand, but she might not want to hold the asset herself, right? The asset is not valuable because B likes it. The asset is valuable for B because she's an intermediary and she can make money from that activity. Now, C is trying to borrow the asset from B and could have the temptation to make a lowball offer, right? To say, well, I'm going to give you a very low price for that asset. Now, if B doesn't have the asset yet, she would, of course, reject that low offer. But if B has already the asset, then she may accept a bad offer because the alternative is to hold on to the asset and she doesn't really care about the asset. So the low offer is better than just holding on to an asset she doesn't care about. In the current system, in the legacy system, traders don't know dealers' assets holding. So C wouldn't know whether B has the asset already or not, and that discourages C from making a lowball offer. But in the setting with instant and programmable settlement, then B has to reveal that she has already the asset in order to even start negotiating a trade with C. And C can exploit that information because now C knows for sure that B has the asset, and that increases the temptation to make a lowball offer. But if B can anticipate that outcome, then she will prefer not to intermediate because that's always going to be a bad deal. And so having this system that can entirely eliminate settlement fails, which is great, is also potentially a problem because it reveals too much information. In this case, it reveals the dealer's asset holdings to potential traders, and traders are going to exploit that information, and that may eliminate incentives to intermediate entirely. Next slide, please. So in summary, programmability could have a number of benefits. I just described one potential benefit in financial markets where you can eliminate settlement fails, which are a problem at times. You could also think about government support, as I mentioned earlier. This was much discussed during the COVID crisis, or you could discuss applications to insurance. And that's great, but it's important to understand how new technology could have unintended effects. And in particular, information revelation, which can be really problematic in financial market, is a particularly important area for future research and analysis when we think of DLT and fintech. And with that, I'm done. Thank you so much.
Perfect timing, Antoine. Thank you so much. Very interesting. Very clear that there's clear benefits, but also clear risks that need to be understood in the design of smart contracts and the likes. The last speaker this evening is Mu-Chan Chung. Mu-Chan Chung, welcome. The stage is yours.
Thank you, Chair. And thank you for the panelists for their excellent presentation. Sorry for my background, it's not so illuminating, but I hope that my presentation will be illuminating for all the audience. And I'm very glad to update you the recent development of our ECNY project. I believe that almost every audience have already heard my introduction before. That our motivation of the drivers of the ECNY project is actually similar. Next slide, please. Is similar to most of the central banks. Firstly, to improve the efficiency of the central bank payment system, and secondly, to provide a backup or redundancy for the retail payment system, and last but not least, to enhance the financial inclusion. Next slide, please. And we have already updated several times our definition of the ECNY, and this is the latest version, and in the future, it may change again with the progress of our trials. And ECNY is the digital version of currency issued by the PBC and operated by authorized operators. So that means it's a fiat currency, and it's just a new form of the RMB. It's not a new money, and it is convertible with physical RMB on a one-to-one basis, and both are the components of the fiat currency system. Meanwhile, it's a value-based, quasi-account-based, and account-based hybrid payment instrument, and with legal tender status and a loosely coupled account linkage, and supports managed anonymity. And then you can see from the definition that we have a two-tier system, and the central bank works as the first tier to issue ECNY to second-tier authorized operators, and the general public will exchange their deposits with the second-tier authorized operators for ECNY. With the two-tier system, we can provide a level playing field to all the market participants. Of course, you can see from the definition that ECNY is mainly positioned as M0 and pay no interest. And of course, we offered managed anonymity. Next slide, please. As I mentioned, one of the motivation of ECNY project is to improve the financial inclusion. And the ECNY is loosely coupled with the traditional bank account. User can open the digital wallets without the support of the traditional commercial bank accounts. So the underbanked group can enjoy easy and basic financial services. And for the short term, foreign visitors can also enjoy the mobile payments convenience in China as easy as the locals. And the PBC collaborates with all the authorized operators on a barrier-free design to meet the needs of physical challenged people and the elderly people. Next slide, please. So this is the eCNY app, and also we officially released our app in January this year. And here I would like to show you a video on the latest version of the eCNY app. Please play the video, please. Next slide, please. And next page, please. Sorry. This is a video that introduces some general accessibility features of the eCNY app. Next, you can play the video, please. Next slide, please. We also designed special functions in the eCNY app to serve the payment needs for physically talented people. Please play the video.
Now we'll show you how visually challenged user can transfer money in the eCNY app with a built-in screen reader.
eCNY. Double tap to open. Wallet, provided by BOC. Balance, 1,127.56 yen. Show balance. Transfer, button. Back, button. Transfer to. Transfer using recipient mobile number selected, button. Transfer to ICBC Albert Anonymous 186, 4 stars, 8,969, button. Edit, please enter amount, text field. 2, button. 2. 2. 0, button. 0. Confirm, button. Please check your transfer details. Continue, button. Pay, button. Password box, 6 characters. Close. Successful. Done, button. Wallet, provided by BOC.
Okay, next slide, please. I will show you a video on the dual offline payment enabled by the hardware-based eCNY wallets placed inside the mobile phones. Please play the video.
We can still make eCNY transactions when both payer and receiver are offline, which we call it dual offline payment. First, we disconnect Wi-Fi on both phones and turn on the airplane mode to simulate a no network state. For the recipient phone on the left, click Tap button. There is a reminder that we are switching to offline wallet. Now click Receive button. Set the receive amount. On the payer phone, press Confirm and verify the fingerprint. Then move the recipient phone closer to the payer phone. You can see we've successfully made a dual offline payment.
Okay, next slide, please. You can see from the slides that we also provide different kinds of hardware wallets products, including IC cards, brand fit the brand, and SIM cards, etc., which can be used when there is no internet connection or power supply. Next slide, please. Although last speaker said that there's some unintended consequences, but we also, because our eCNY actually focus on the retail sector, so I will share with you some development of eCNY smart contracts. Next slide, please. We are using smart contract to help protect the consumer's prepaid fund. In the eCNY smart contract function can be used to avoid any embezzlement situations. As shown on the right-hand side of the slides, prepaid funds are automatically linked to sub-wallets with smart contracts embedded, where payments and receipt of the funds are controlled by the smart contract without manual intervention. So that's the smart contract use. Thank you for listening. Back to you.
Thank you so much, Mr. Mu. We are running slightly behind, but we have another 20 minutes or so for questions and answers. If you would like to ask a question, please click on the chat box and use the following format: your name and then the panelist name that you want to ask the question to, and then followed by the question. We have a few questions already, so maybe we start with those. The first one is for Benedict. Benedict, the mBridge program has been running since 2017 in different formats. The question here is, how do you address cross-currency issues in mBridge arrangements, and do you think that CBDC can bring significant benefits for cross-border transactions compared to existing infrastructures available in the market?
Yeah, so thank you for that question. I would answer that in fact the whole platform as currently designed is indeed designed to ensure that there is this possibility to do cross-border payment between two jurisdictions. Now, as part of that though, and I'm not very clear on the question, but I think the question may imply questions around liquidity. And these are areas where we're also planning to do further work in the next 12 months. So indeed, it's a fact that certain currency pairs are very liquid, whereas other currency pairs are not liquid. But we do also think that liquidity is something that will come over time as this kind of solution is made available. In general, markets develop when there is more opportunity around certain pairs, and at present, there's very few of these opportunities. So a platform like this could actually increase that opportunity.
Yeah, very clear. Thank you so much for answering that question. The next one, also an audience question. This one is for Antoine. A very interesting presentation. You mentioned that tokenized markets or programmability might disrupt current market arrangements. One example you had was by providing too much information in the actual transaction or the smart contract. The question is, what should regulators prepare to ensure that the disruption to current market arrangements won't happen? Or should it happen? It would be the follow-up question, I guess. Antoine, yeah.
Right. I think this is a really good question. So it's very important and this came up, I think, in the previous panel, when we introduce something new functionality or new payment instruments, that we understand what the potential consequences are. So I'm not making a prediction that bad things will happen, but I think that it's interesting and important to illustrate situations where they could happen. And it's important for central banks to do appropriate due diligence, serious analysis to minimize the chance that these things will happen. I think the one thing I would add is that when we think about distributed ledger technologies, there is often this idea that one of the great benefits is provide more information, more transparency, a single source of truth. And that's great. And there are lots of cases where transparency is important and valuable. But in financial markets, we know that too much transparency can be bad for liquidity, can be bad for intermediation. So this is an area where we should be particularly focused and careful.
Yeah, perfect. Thank you so much, Antoine. Mr. Mu, the next one is for you, and it's a very long one, so I'm going to try to summarize it. There's a question regarding the security aspects and the threats of quantum computing to the solutions of ECNY. The asker of the question knows that your smart team is working on that, but how do you protect your capabilities from quantum computing threat in the future as it evolves, Mr. Mu?
Thank you. That's a very good question. I also heard that in the last session, a lot of experts actually was discussing that issue. Actually, we have already attach a great importance to that issue also. But as we perceive this issue, that we believe that firstly is the standards. Standards should be come first, and then we can talk about the algorithm and other measures. For example, we have a lot of experts and scientists already working on the possible solutions of the anti-quantum, crypto. For example, the lattice-based crypto. So we have a lot of possible or available solutions. But firstly, we have to have the standards in the place first. And I believe also, as the experts from the last session said, the quantum computing is still far away from us. Thank you. Back to you.
Thank you so much for that answer. Can I ask, do we have time for one more question, or are we? One more question, okay. This is for Benedict, just because you might be from the same country where I'm from. Enbridge was running for since 2017 in different formats with Line, Rock, and other formats. What has surprised you most in the development? What are the key learnings from 7 years or 6 years of innovating around this cross-currency CBDC approach?
Yeah, I would say actually that 2017 and 2018 were national prototypes and not cross-border prototypes. So in fact, they're not so comparable to what's happened after 2019. So after 2019, the focus has become cross-border. In the first phases, it was more about understanding tokenization and understanding generally the features of it. And for example, the instant settlement and the DVP features, for example, in the context of a bond. So I would say it's a learning journey. And I think one of the questions often asked is there a first mover advantage in these things? And maybe I would answer that. I think there's a first learner advantage in these things. You need to be able to be up to speed on how basic tokenization works. And then you need to think about that, in our case, in a cross-border context. And then you need to lay over a lot of multidisciplinary thinking, which is what I showed. We need legal mindset, we need compliance mindset, we need policy mindset. So is there anything that has surprised me so far? Not really. The only thing has been a positive surprise, because we've had no issues on the pilot. There was no failures of any sort in our 1 month pilot. So it's been a very positive surprise. But I would say, as I closed with my roadmap slide, the work ahead is also predictable in that sense. So no surprise, but I think it's a path we just continue making progress.
Perfect. Thank you so much. There's one more. This is a short question, the final one for Antoine and Mr. Mu, just to share the limelight equally. Both of you mentioned smart contracts, and especially Antoine in terms of too little or too much information in the actual contract to impact possibly the trade or the valuation. How would one start by determining where the balance should be in terms of the level of information sharing, especially around smart contracts?
Maybe I can start. I'll be real brief. I think it really is context dependent. So there isn't one size fit all, but there are certain situations where more information and transparency is going to be a great benefit, and other situations where we should be careful. And so it requires research and careful consideration of the specific circumstances.
And Mr. Mu, maybe the same question in terms of sharing information?
Yeah, I agree with last speaker, and actually we are focused. Actually, we attach a great importance to the privacy protection. So we also running our smart contract environment on a two-tier basis, and all the smart contract will run on the we will be running on the authorized operators environment, not on the central bank side. So we have a firewall between the two, the tier 1 and tier 2. So just to protect the privacy of the users. Thank you.
Perfect. Thank you so much. So in order to wrap it up, what we've heard are great examples of CBDC. A lot of work is happening, a lot of experiments and design still to come and to be explored, especially on the policy part and the security part. I'd like to thank Benedict, Antoine and Mr. Mu for your kind sharing. And I'd like to thank our host, Bank Indonesia, and all of the audience members for tuning in. Back to you, Wahyu.
Right, thank you, Mr. Conan, and all speakers for a very enriching session. Right, once again, let's give our moderator and speakers a round of applause. Ladies and gentlemen, to view the previous TechSprint charging event, you are very welcome to scan the QR code displayed on the screen, or just click the link we have provided in the chat box. Right, and now we have come to the end of the G20 Tax Frame Award Ceremony and third CBDC seminar. On behalf of the committee, we would like to thank the Governor of Bank Indonesia, Bapak Peri Warjio, General Manager of the Bank for International Settlements, Mr. Agustin Karsten, and our distinguished finalists and participants of Tax Frame, our distinguished speakers and moderators, and also our distinguished guests, and for your participation. And we also offer our sincere apology for any oversight that might occur during the event. I'm Wahyu Wiwoho, signs off. Have a good day. Bye-bye.